I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. You guys out there? Usually somebody says hello. Thanks, Kyle. How's it going? Position disclosure. I am out of Google. I've been in Google for a while. I am out of Google. It finally hit my target, 120 bucks. I could have left a runner, but when you're actively trading around a core position for as many months as I've been with this Google and it hits your target, it just feels like such a good victory to take that off. Traded me really well, that stock, while I was in it. It was a little precarious at certain points when it was down in the 80s. But it's a heck of a move off lows in Google. So, yeah, great trade for me. Pretty happy about that one. If anybody's got the link to the YouTube and they can post that into the VTF, I appreciate it. I'm still having these issues, so I apologize in advance about those computer issues. The YouTube's usually a little bit clearer, and hopefully everything holds in, because my computer here has been really struggling streaming on multiple services at once recently, and as soon as I get back to New York, I'm gonna get a new one. But again, apologies in advance for that. Yeah, this Google move is sick. I think I first got involved in a core position around August, and I remember getting really heavy on this multi-day pullback here. It was very interesting how the market bottomed in October, but FANG bottomed last. They rolled over last also. You know, like FANG stocks in general, if you go back to January 22, which is when the market peaked, generally FANG stocks, obviously I'm just looking at one individual name right now with Google, held up the longest. And that was one of the things that bears right now are actually pointing to, is one of the big signals, though it's actually not my preferred signal looking back in hindsight. One of my preferred signals in the beginning of or at the end of 2021, beginning of 22, that the market was really set to roll over into this bear market, was that breadth weakened so badly. And you can see that with the IWM topping in November with that big false breakout in November of 21 that I always point to. And that's actually my preferred thing to look at, is the fact that IWM was rolling over, even though that's one and the same, I guess, as breadth weakening. But that IWM leading us down was the really big signal, and it's been a very consistent thing for a year and a half plus now of IWM weakness leading to the rest of the market failing. The big question that we keep talking about is if this time is different, because right now we've been looking at a very weak IWM for well over a month, ever since SVB broke down, yet we still have this incredibly strong NASDAQ that's led by, well, names like Google that got back to $120. So, yeah, heck of a move with some of these FANG names. Google actually did not deteriorate as much as some of the others, like a Facebook did. But Google was back at 150 bucks at the end of 21, early 22, and then just totally died, culminating in this low at $83. And what I was saying was, it's interesting that the FANG names rolled over last. They also bottomed last. The market, unless a new low comes in from this market, which could still happen, the jury's out. But the market had that low on the CPI day for, what month is before October? September. The CPI day for September, which took place on October 13th. That was the low for the market. But if you guys remember those big sell waves that came into these FANG names into late October, beginning in November, when the rest of the market already bottomed, this was like the most extended I feel like I had ever seen the FANG stocks get to the downside without news. If it's a news event and it's a terrible earnings report, which we've certainly seen plenty of those with Facebook and Netflix, it was different. But I remember this 3-day sell-off here just being absolutely vicious. You can see it with Google for sure. Apple wasn't as bad. Apple basically got back to those October lows. I remember it with Microsoft. Same thing. And this one gave the RDR down here. I remember trading this also. 3 huge down days in a row. Day 4 gave us this beautiful RDR for the snapback trade, which was just an incredible trade for us. Amazon was weakest longest. That's right. I remember this. When you had Google and Microsoft starting to bounce, I remember I was also working this Amazon, and Amazon was really frustrating because this one had closed at new lows on the 9th, and I think the 10th was earnings. If I remember correctly. Help get this thing going again, but I could be wrong. And this one actually then made a new low. Amazon's been one of the weakest ones out there. You can even compare, like, if you just go back to the August highs, Google versus Amazon. Google started from 122.50 and worked its way down to 82.50. Amazon at that August peak was $145 stock, $147 stock, which also worked its way all the way down to 81, was weakest at the November low for lots of other FANG names, and then continued to make new lows in December and early January. So this one's been brutal, but it's finally starting to play a little bit of catch up. Meta also. Oh, I remember this earnings report for Meta, and I remember buying. This is the other one that we were buying down here. I bought Meta, I think below this low, after hours one day. I feel like it traded down to like 87 or something. I bought it. I remember buying it down in this area for sure. I might be a little bit off on the new low into 87, or maybe that was actually the earnings day itself. It might have traded down to the mid 80s. I remember buying stock at 87 and change. It might have actually been the earnings day itself after hours. But yeah, this one also bottomed out in early November, whereas the rest of the market was mid-October. So just really interesting. So I managed to maintain a core position, albeit a painful core position, throughout this entire down move. And then I remember really sizing up after that 3-day downside move in all these names. Google, I think Microsoft was the best and easiest because it gave that RDR. Apple was the strongest, but that one also, I remember being involved off of this tail in Apple. Microsoft, I think Meta in this area. I remember catching this move in Meta. I think some of you guys are in it, from like $90 back to like 110 or something, and thinking I was a genius and getting fully out of the trade. Up at 240 now. I'm buying stock after these last earnings reports. So yeah, I don't know. Fun with history. Just cool to look back at this Google over the period of time in which I was involved in this trade. This one never made a new low like Amazon did at the end of December and beginning of January. Rode this move up here, watched that failure off of this earnings report at the beginning of February lead to a big dip back down to $90. Remember buying it back around 90. I think I bought $90 like itself, or $90.01, usually where you find me bid a little bit above a whole number. I don't like to bid and offer at whole numbers. I was able to kind of capture that low in here, and then back again here. We were looking at this $89 to $90 support, and then I've had a target of $120 ever since then, and I've just had a game plan of trimming and trailing, selling on the way up, buying back stock on pullbacks, selling on the way up into these extension moves, buying back on this like retest of $100 as it comes back into the equilibrium area. The same game planning stuff that I always preach for reward maximization, combined with that cash flow trading, that cash flow idea of selling into extension and then rebuying at equilibrium that I like to do a lot of as well. So yeah, taking I think a well-deserved victory lap on this one at Mines, because this was a long trade over the course of a lot of months, and it ended up being a pretty good P&L name for me, especially with these growth names performing, not growth names, mega cap tech stocks performing the way that they've been. So I guess enough with the victory lap. Let's hop over and let's take a look at markets. Though I got nothing to say. I don't think anybody's got anything to say. Was it not an inside day? Did we break lows at the very close? Where did we close? I'm seeing 410.24 for SPYs, and yesterday's low was 410.39. Is that accurate? No, 410.23. All right, so it is an inside day by a penny. I almost thought for a second that my afternoon meeting name on YouTube was wrong. The name of today's afternoon meeting is inside day within an inside day within an inside. I think the title alone tells you all you really need to know about the market here. Yesterday was a really productive day with the IWM leading, and today that fell out of bed with the IWM being weak again and coming right back down. So we have another inside day for the SPYs. There's absolutely nothing to talk about. This pattern just keeps tightening and tightening and tightening. Whereas, yesterday, if you're, you got to be very cautious on overreading these big picture technicals right now. And that's one thing I keep warning. But yesterday, the way we closed with the IWM leadership, I'm thinking to myself, all right, maybe we're setting to actually break down. The whole point here is we just can't know. Just yesterday, I'm like, oh wow, we're retesting 176. It's a big level to recapture. Relative strength in the IWM, relative strength in the KRE. Let's be excited. This is looking good. Maybe we can break out. Maybe we can start testing the 178 to 180 again. And now here I am the next day, like, wow, we just gave back 100% of yesterday's gains. We closed just in front of this 172. 172 is starting to establish itself as a tighter support level. We lose 172, could lead to a breakdown, or we lose 170. We lose 170. The SPYs and the Qs probably fail and the entire market shot. So, on the one hand, you could say what a difference a day can make. On the other hand, you could say, Derrick, stop overreading this market. There's not even anything to talk about. Just know your levels, wait for them to break, and act accordingly. So that's really where we're at. The IWM is scaring me here again after giving me a little bit of relief yesterday. The SPYs are just, there's absolutely nothing to talk about. Inside day within an inside day within an inside week. And the Qs here, if I can never get the chart up, we can take a look at a QQQ chart that looks just fine. Qs are up 0.2% on the day. SPYs are down 0.6% on the day, and the IWM here is down a terrible 1.25%. So the Qs here look just fine. They made new highs today. They're still in this upside grind. It's an inside day enough for the Qs. So we were back to having extremely poor breadth, with Google having another that chart to work. Google up 2.6% on the day, monster. Amazon up 2% on the day, also a monster. Apple, and my system is running so slow. Apple being a little bit slow for me, but I know that Apple was a little bit weaker. Yeah, Apple basically closed flat on the day, but it's still within a bullish consolidation pattern that it's continuing to build out. Microsoft had fits and starts with strength. Meta started really weak and then got bought back up and was decent. So yeah, breadth here is still really poor. Microsoft up 0.75%. Those semiconductors, AMD and Nvidia were great. If anybody took the Microsoft 2 inside days in a row and up, that was great off the open. If anybody took the Nvidia through 290 that we've been talking about, that was great off the open. It's just, if you're thinking about the big picture of the market, there's a lot to be nervous about, because that IWM just can't participate, and this market is struggling to be able to break out without it. I've been having a lot of people reach out to me, some of whom are traders that I respect, who are not in our VTF, but maybe it's reason why they should get in, to talk about how difficult they've found this range-bound market environment to be. And I'm like, yeah, if you're trading futures and all you can trade is the E-mini, then it's probably an extremely difficult market. But if you're an equity trader and you're focusing on these earnings names and you're focusing on names that are in play, as a team, we have had trades every single day that have been awesome. I think every day trade that I took yesterday and every day trade I took today, I'm not 100% sure about that stat with yesterday. I'm pretty sure. For sure today. Every day trade I think I've taken over the course of the last 2 days has been profitable. Every one, which is awesome. And by the way, that's actually kind of unusual. I definitely have losing trades all the time, trades where I'm down P&L and that's part of the game. So I'm not saying that I'm God's gift to trading or anything like that, but it's been great. Today, Baidu was the earnings name that I was really focused on. I think Baidu was getting hit down a little bit pre-market just because of China growth concerns. The Chinese names were really weak early in the day. I looked at that Baidu report. I thought the Baidu report was phenomenal. So originally I was planning on looking at 129, but they opened it so far below 129 that I ended up taking stock back through 126, which was solid. Well, I didn't mean to do that. Where'd that chart go? Chart, where'd you go? There it is. Yeah, buying some 126s, and then I think it was Christian in the VTF. I forgot that I bought the stock because I got so focused on that SSYS that I planned on selling stock well before 128.20, but I typed it up because he brought it back to my radar. I was like, oh, this is better than I was game planning, so I just down ticked some stock real quick, reloaded on that dip versus lows, sold on the way up, sold on the way up, sold on the way up, reloaded some stock at 127. Same thing, just that cash flow trading of trying to keep a core position but selling stock and buying pullbacks, like I talk about all the time for cash flow management around core positions. And then took the reload again at 127, sold some, and then you'll probably see me selling almost every dollar up eventually. Sell some 128s, and then I just started taking off. When we broke new highs here, I sold 132, I sold 133, I sold 134, and I ended up liquidating the rest of my position in the close because I don't really want a lot of new long swings. So Unity was a solid one for me. Sorry, that's Baidu. Unity was also a decent one. This one I started too early on this one. I think I took my first buy around 28.15, and then it was way too early. But I was looking at this capitulating volume on this bar, this maximal volume here, plus the degree of extension on the 5-minute chart. This eventually was insane. I don't like charts less than 5 minutes. I never really look at 2-minute charts and 1-minute charts, but every once in a while I'll just reference it. I don't even have access to a 1-minute chart. I do have access to a 2-minute chart that every once in a while I'll reference, usually because I missed a print and I want to see what a print high or low was because I wasn't watching the tape. But we talk about our extension rules, where a stock is trading versus the 8 and 21 EMA, and we talk about that in conjunction with time frames, right? So it becomes very rare to see, like, really after 9:45, definitely by 10 o'clock, to see a stock that's extended on a 5-minute chart that hasn't touched its 8 EMA on that 5-minute chart a single time. And especially if there's no news and that's happening. If there's news, momentum can be a heck of a force in the market and can really drive things for much further than you would expect. But especially if there's no news. If you're looking at something that is very extended by 10 a.m. on a 5-minute chart and hasn't even touched that 8 EMA, that's when you can start thinking about potentially going the other side. And then what we talk about is come like 10:15 to 10:30 in the morning, Eastern times obviously, that's where your 15-minute chart becomes really important. So a lot of times if we're looking at, like, just say like a downtrending market and we're trying to see if that market can give further continuation to the downside, I'm looking at extension on multiple time frames in conjunction with what time of the day it is. And I might see like a market that's been weak all morning and is trying to break new lows at like 10:20, 10:25 a.m. And I'm looking at this point how extended it is on the 15, and I'll be able to say to myself, well, there's a good chance that these new lows are just shakeout lows, that they're not real, that they're not going to lead to further downside continuation. And then you could look for like a false breakdown, upside move for 15-minute correction, something like that. So again, you see between 9:45 and definitely by 10 a.m. a stock that has just been buying and buying and buying, or selling and selling and selling, hasn't even touched that 8 EMA on a 5-minute chart. That's going to be difficult to give further continuation, especially if there's no news, because the way that an extended stock becomes more extended is through momentum. What creates momentum is typically news and or volume, ideally a combination of both. And that's when you can get these things that just keep running and running and running. But to find a stock that didn't have news, and I couldn't find any news, it didn't seem like anybody else had any news, that at 10 a.m. has not even attempted to touch the 8 EMA on the 5-minute chart yet. Forget about the 15-minute chart, which is just getting silly extended by 10 a.m. with these 3 15-minute bars straight down. You got the IWM lows on the 15-minute chart. Now, again, I don't overly care about 15-minute extension at 10 a.m. It's too early. I start caring about 15-minute extension at like 10:15 to 10:30. But just as a reference right now, with Unity at that low at 10 a.m., stock's trading at $27.57 with the 8 EMA at $29. So it's a very, very healthy amount of extension. But This thing, again, I almost never look at 2-minute charts, so I can say to you that I've never seen this before and have that be an accurate statement, but I don't look at 2-minute charts, so maybe I would have seen it before if I actually looked at 2-minute charts. But to see this stock, again, on no news, by 10 a.m., hasn't even touched the 80 EMA on the 2-minute, that's like incredible. It's like a very rare occurrence. So obviously somebody was dumping stock. It may have just been technical in nature, a failure of this earnings report, totally now filling and going beyond filling the earnings gap on that report. But I started a little bit too early because it was 9:50 a.m. and I'm looking at the extension on the 5-minute chart versus where the ADMA is. Lows here is 28.10. ADMA is at that point 28.77. And, sorry, 28.97. So you got 90 cents of downside extension on a 5-minute chart in a stock with no news at 9:50 a.m. It's becoming it's like a pretty rare occurrence. And that's why I started there. And I was too early. It cost me some money. You have to make sure that if you're gonna hold something against you looking for an equilibrium pivot, you gotta make sure that the sizing is appropriate. You have to either be super light or you gotta get stopped out and revisit. Or a combination of both is usually what I like to do. I usually like to, this is the same thing I was trying to do with PayPal, which I also ended up liquidating into the close. So I'll like to take a core position that I'm willing to give a lot of room on, and I can afford to do it because I know my account size, I know my risk tolerance, but I can have this smaller core position. And for me, that core position is, let's call it 500 shares, and the stock's at 28.25 and ends up putting a low of 27.50. Will I be happy to be 75 cents or 65 cents, or I guess in this case it was 60 cents out of the money on 500 shares? Absolutely not. But it's also not the end of the world for me. I'm looking for the signal to be able to get heavier. That first potential signal was the volume capitulation on this candle. That just totally failed. Zero bounce at all, despite capitulating volume and this degree of extension at 9:50 in the morning. Okay, fine. A stock can remain irrational for longer than I can remain solvent. So if you're heavy, you gotta stop yourself out. If you're light, you might be able to give it some more room, knowing that eventually you will get a correction. And in this case, and this is interesting from a position management perspective, if I started buying this at like 28.15, which I think was my initial entry price, by the time I got the equilibrium correction to the ADMA was actually below that price. So whereas at first I'm looking at this like, okay, like I can come in, I can get some stock, around 28.15 here. I'm looking at, I've got room up to the ADMA at $29 off of this. That could be really solid for me. It's a pretty good potential risk reward. The volume capitulated. See if I can get a bounce. Eventually, this thing is so weak, the moving average continues to move down, that if I was really heavy at 28.16 and didn't have a game plan to average down and buy more or stop myself out and look for a new entry price to be able to get more stock, by the time I actually get my price correction and the ADMA comes in, I'm still losing money. But it is a rule that inherently all stocks will have to touch that moving average. Just the thing is that they can go down or up much further than you might normally expect, and that's especially true when there's momentum driven by news and or volume. So position management here is key. Being willing to stop yourself out and revisit is key. Most of you guys who are in the trade with me, you didn't get in as early as I did. You actually got in at the low, so that's awesome. Probably a bunch of you guys have better P&L than me in it because I started too early, was taking losses, and holding a core position against me for 60 cents. And then your next signal kind of came in eventually when we had just an insane degree of extension at 10.10 and a doji candle that came in as his volume was picking back up again. Volume actually maximized then on the bounce candle. And that was it. That was all I needed. I called it out. I took a much heavier position. I on my heavier buys at 27.59 and 27.61. I think I also bought some 27.66s. So I got a bunch heavier again on that. Finally got the price correction I was looking for. And all I was looking for was that correction back to the ADMA. That was really it. I definitely could have had a greedier game plan. especially again, given the time of day as we're approaching 10:30, a 15-minute timer price correction is likely. In this case, it was strong enough to give a full 15-minute price correction. I could have game planned myself to have for a much bigger. What I was looking for was equilibrium snapback to the ADMA. So I liquidated almost my entire position by 28.06, I believe, and took a ton of sales in those 27.90s on the way up. And then, Cody convinced me to keep a runner just in case. Just in case they oversold this thing and find some support down here somewhere on this earnings gap, and they end up reversing this thing intraday. And even though it's a lower probability situation, maybe if I could have gotten a close above 29, I probably would have swung it. Even though I'm trying not to add new long swings right now to the overall portfolio, just for portfolio risk management purposes. But if I could have got that move up to above 29 on a closing basis, it'd be big enough of a win-win situation that I probably would have looked to keep some, similar to how I kept some AI yesterday, which I'm still in, even though again I'm trying not to add overall to the risk portfolio right now. So that turned out to be a difficult but good trade. I always think that counter trend trades are more difficult than with trend trades. As a general rule, I think trading with the trend is much easier than trading against the trend. But we've also been in a market environment here since we've been stuck in this range where with trend trades such as breakouts have been significantly more difficult unless you're really focused on in-play names, and counter trend trades have been working better because by definition when you're in a range when the market looks the worst is actually when you usually get bounces, and when the market looks the best is when the market actually usually sells off. So that's been working out decently as well. Those are probably the two main names of my focus as far as today's game plan from the morning went. It turned out to be Baidu, and Unity was not even on the game plan. It just was something that one of you guys put on my radar that I eventually got involved in. All these other names were disappointing. I think that LAC was okay, but like PaySafe that we're looking at never broke the level. RCL, I remember it sold off too much, too fast in the beginning of the day, and I just took it off my radar. It should not have been filling the gap. And that's pretty much it. So I think that's all I got from today's trading session. Nothing to talk about in regards to the market, but yesterday things were looking a little better, like we might clear up. Today things are looking a little bit worse, like we might clear down. Again, your guess is as good as mine. Happy to take a look at any questions that you guys have. And if there's any questions on the YouTube, if somebody could copy and paste them into the VTF, I appreciate it. I don't want to bring the YouTube up because my computer's having enough issues as is. Western Alliance Bancorp quarter-to-date deposit growth is positive $2 billion on WAL. Oh, it's up huge on that. That's solid. This is one of the craziest stories, I think, of the entire regional banking crisis. Was this WAL sell-off on a Financial Times article that turned out to be incorrect. Now up 12% here after hours. Is KRE moving on that as well? KRE giving a really nice bounce after hours off of that. Up about 30 to 40 cents from the close. Is the IWM up after hours off of that? Yes, it is. Oh man, this market is so insane. Two days ago, I'm ready for the breakout. After today, I'm ready for the breakdown. Now this news comes out after hours supporting the regional banks. What do I keep saying? The key to the IWM, well, the key to the market right now is the IWM. The key to the IWM is the KRE. So this is actually really positive news. A little bank, I don't know how little they are. They're probably not very little. But I've never heard of Western Alliance Bancorp, honestly, until the regional bank crisis started occurring here. I've never heard of this stock. I've never traded it. I'm not familiar with the symbol. But all of a sudden, this regional bank, Western Alliance Bancorp here, can move the entire market and potentially cause us to break out. So let's assess that in the morning before my head explodes. From Kyle. Wanted to ask your advice on something. I've been building folders of setups and developing rules for each on how to trade them. I love that. I have separated purely technical breakouts from breakouts on names in play. Okay, so you're separating that based on a layer of probability. With purely technical breakouts, the first of criteria I have is the market needs to be in trend, which clearly we are not in. However, I noticed the Qs seem to be trending a bit better than the SPYs and the IWM. Would, for example, this Microsoft 310 break from today, I think, is when that broke, right? The 2 inside days in a row. Let's see if I can get that chart to pop up. Yeah, 310's resistance, yesterday's high is 309.90. Technically meet the criteria of index trend markets since the Qs are technically in trend, or would it be better to set criteria as all indices need to be in trend? Sure. So what you're talking about here is trades versus layers of probability. So I can tell you the way that I've always kept statistics on trade types is basically off of the trade type itself, and then I separate out layers of probability when I'm grading that trade. So you could have a breakout trade, right? The name of the trade is a breakout. That's an A+ trade because every layer of probability is on the side of that trade. Or you could have a breakout trade that is a C level breakout trade because you got a couple layers of probability that are with it, a couple that are against it, a couple that are neutral, whatever. So I separate, and I've always separated, what an actual trade is from a layer of probability. And layers of probability are not trades. The Qs are strong, so I'm going to buy Meta. No, that's not a trade. The Qs are strong is a piece of information that means that any Meta long trade that you find will have a higher probability of working out than it would otherwise. So we have in our training program class, the probability class that I have, I think it's 8 layers of probability that are fairly ubiquitous for any trade that you can take. And then separate to that, there's a lot of one-offs. Like I consider like bullish option flow to kind of be like a one-off layer of probability. Like it's important if it's there. You know, if I'm trying to go long and I'm seeing a lot of bear flow hit, it's going to be a layer of probability against me. If I'm trying to go long and see a lot of bull flow hit, it's a layer of probability for me. But plenty of times there's just no bull flow or there's no option flow that we're seeing on the institutional side that's being posted to the VTF that's affecting the trade that I'm involved in. So what do we look at? We look at the market. We look at is there news. We look at is there relative strength and relative weakness. We look at is there volume confirmation. We look at daily chart patterns confirming the smaller chart execution that you're looking at. And we look at time frame continuity. So what you're talking about here is the market. You're really kind of combining several layers of probability here as you're trying to figure things out. And instead of combining them, I would encourage you to separate them. So you're talking about the market. You're talking about relative strength and relative weakness. And you are talking about, what was the third one? I just totally lost my train of thought on what the third one was. Shit, whatever. Whoops, sorry, I'm not allowed to curse. So whatever, we can just go with those couple, and then the third one I'm sure will come back to me on what you're referencing here. So I don't, and you're also talking about if it's in play. So I don't separate technical breakouts as one category versus technical breakouts in a name and play. What I'm going to do is I'm going to have an understanding that the technical breakout will have a higher probability of success if it's in play. And it'll also have a higher probability of success if the market's in. Oh, time frame continuity, that's the other one. And it'll also have a higher probability of success if there is time frame continuity. Time frame continuity to me means a couple of things. And maybe this is just kind of my version of it. Time frame continuity means every time frame obviously telling you the same message. That's how we traditionally know it. But for me, time frame continuity is also what you're describing here, all 3 indices confirming, which we don't have. So if you're looking at a Microsoft breakout, I would just say the trade is the Microsoft breakout. And again, what separates a trade from a layer of probability? A trade meets the definition of a trade. A layer of probability does not. A layer of probability is information. What is the definition of trade? A trade is something with a technical reason and a technical stop loss, so which we call an out. So for Microsoft, the technical reason is a $310 breakout and the supply and demand dynamics behind what a breakout actually is. Or 2 inside days in a row and a bull flag. Or guess what? The 2 inside days in a row as a bull flag is a layer of probability. This is the chart pattern one, is a layer of probability that the 310 breakout will actually occur. But the trade itself is very specifically a breakout. And if we want to talk about the $310 breakout as your trade, then we forget about the inside days for a minute. Let's just forget about the market. Forget about relative strength and relative weakness. Forget about all of your layers of probability. The trade itself is 310 breakout for Microsoft. And the right way to trade that is to buy through 310 versus the ignition bar low. So you buy through 310, and in this case, the ignition bar low is 209.83. That's actually a stupendous risk reward for a name like Microsoft to be able to only have 18 cents worth of risk in it, because you buy 310, you put your stop loss a penny below the low of the ignition bar, your stop loss is going to be at 82 cents, so you're taking on 18 cents risk plus any potential slippage that could come from it. You should expect to get some slippage in Microsoft. It's an expensive name. It does trade pretty thick and pretty liquid, but often there's at least a couple penny spread on it. So, 18 cents worth of risk. And that's it. That's your trade. That's your trade. Everything else is a layer of probability. Okay? So, relative strength. That's on the side of your trade. The market. The market, I would argue, is on the side of your trade because it's a QQQ name, though that kind of layers in a little bit, and this is where things begin to complicate, and trading's not always super straightforward. It's really because of relative strength that the market's kind of on your side because of the QQQ. But the flip side is that I would argue that you do not have full time frame continuity across the indices. Is a layer of probability against it. So I kind of put, like I said before, are the SPYs, Qs, and IWM telling me the same message? I put that more into time frame continuity and a little bit less into the market itself. But again, there's crossover, and you could easily make the argument that what I'm describing is a market-based layer of probability versus a time frame continuity layer of probability, right? Because the flip part of the argument also is that Microsoft itself is giving you time frame continuity. The daily is trading higher, the 15 is trading higher, the 5 minutes trading higher. Everything's trading higher in this thing. You've got full time frame continuity. But the market, I guess, isn't fully there with its time frame continuity, if that makes sense. And then another layer of probability that you have, which I think is potentially an overlooked one sometimes, is the big picture charting pattern confirming the small picture trade. The small picture trade, even though it's based on the daily chart, which is how we want our breakouts to always be based off of, the small picture trade is still the 310 breakout. But the fact that you got 2 inside days in a row and a bull flag posts a phenomenal earnings report is the big picture chart picture, which is also a layer of probability. So you got a lot of layers of probability on the side of your trade. The volume is also a layer of probability that's on the side of your trade, but I would argue that there was no way that you could tell that at 3:10 in the morning when this thing opened up and instantly it was trading through 3:10, and you either had that stock or you didn't have that stock. And I don't even think that there was a way that you could know that the volume was that big in the first 20 seconds or whatever, however long it took to actually break out through the level. So that's kind of how I classify it. It can make keeping statistics a little bit tricky, because not every, like I was saying in the beginning, not every breakout is created equal. If you're keeping statistics on your trades, which is something I encourage people to do, to just assess, that can be really helpful for understanding market environment and understanding what types of trades are working best in that given market environment. Your data can get skewed a little bit if one type of trade you happen to have, and this is going to be an extreme example, but I'll use it, If in one type of trade you happen to have taken 3 A+ trades in it and the P&L looks phenomenal, and in another type of trade your statistics show that you've taken 10 C trades in it and your numbers are garbage, well, maybe, you know, if everything was a B trade, then the numbers would be looking a lot different. So that's just where it helps to have more and more data kind of coming over time, and that should naturally balance out. But it's also something to pay attention to, because you got to balance understanding, you know, what types of trades are actually working in any given market environment versus, you know, the actual setup itself, given all of its layers of probability. I guess in theory, though practically this would be like extremely difficult, you could create, the way that you're describing, you know, I have a technical breakout category and I have a technical breakout for names in play. I guess in theory you could make, it just becomes really difficult. You could make like a trade category with every layer of probability. Like, this is what my numbers look like when I have a breakout trade with, you know, 2 out of 8 layers of probability on my side. This is what my numbers look like when I have a breakout trade with 4 out of 8 layers of probability on my side, 8 out of 8 layers of probability on my side. But now your numbers are just getting super, super complicated. I never did it that way. I always just did, this is my technical breakout, I'm keeping my statistics, and I didn't define that this was an A+ versus this was a C, which can skew your stats, because I assumed that that would just kind of flatline over time as I put in more and more data, if that makes any sense. So awesome question, Kyle. I hope I fully answered it for you there. Happy to answer any follow-ups on it. From Anthony, on the list this morning, Baidu was given a 129 level, which was a level equivalent to yesterday's high. It was also where it was holding a support pre-market, and a short-term resistance level breakout level with earnings. On this setup, I assume we are waiting for the price to go through 129. Yeah, breakout trade from earnings. So before I answer the rest of your question, because it's a long question, let me just pause there and analyze that part and talk a little bit about the process. So a couple things to remember. When I'm creating the list that I post, the first thing to know is I will not take every trade that's on that list. That's like a watch list I've created for myself based on what I've seen pre-market. And I'm building that out usually starting at 7 a.m. Eastern all the way through 9 a.m. Eastern. A lot can change, especially if we're talking about an earnings name, in between the time I wrote that on my spreadsheet, which is a spreadsheet I then copy and paste for the benefit of you guys. A lot can change in between when I wrote that on my spreadsheet at 7:30 in the morning and when I'm doing the morning meeting at 9 a.m. and even when the market's actually opening and things are potentially triggering at 9:30. So it happens more regularly than I would like, but there's nothing I can do about it, where, you know, I identify a trade at 8 o'clock in the morning, I put it on my list, and by the time it's 9 a.m. and I'm doing the meeting, it's so far away from the level that I wrote down that it's not even worth talking about. And it never gets to it, or it opened up way above the level or way below the level, and it never properly triggers, and you never trade it. It just is what it is. You know, I'm trying to provide you guys as much information as I can on the watch list of things I'm looking at as I create it, but it's not and never will be like a perfect system. And I highly encourage, and I hope that no one does this, see the list I have and automatically take every single trade that I wrote down through every single level, because I'm not doing that. So I would certainly hope that you guys aren't doing that either, because the information changes. Stocks don't go through their level, they open up too far away from their level, or sometimes the stock gets to its level, but I'm just not seeing the other, you know, layers of probability and the risk reward that I want to see to make the trade worth it, and I don't take it. And that's obviously going to be totally fine. So when I wrote down Baidu this morning, it was trading above 129, actually, if I remember correctly. Let me pull up a pre-market chart here on my other screen. Yes, yeah, it was above 129, and it was trying to pull back and hold 129 as some support even at that time. First it was like 129.75 and not off of a ton of liquidity. But you can see here pre-market when I was writing that down, stock's trading at 129.70, and then it pulled back a little bit further, and it's trying to hold that 129. And like you said, I'm also looking at 129 being yesterday's high, which was acting as some resistance, like 128.50 to 129. So that's going to be broadly the area that I'm looking at. But at 8 morning, and I probably wrote that down even earlier than 8 o'clock in the morning. I think Baidu was the second name I looked at this morning after looking at SSYS. When I wrote that down, look, this thing traded up to 134 at one point. It could have opened at 134. 129 at that point is totally gone and is useless information unless it pulls back heavy to it. Or in this case, it was the opposite. This thing sold all the way down to 125, and Chinese names were getting hit broadly pre-market. At this, puts in a low of 124.35. 129 now is also kind of gone for me. So 129 is still going to be important to me. It was important pre-market off the earnings report. It was important after hours yesterday. But I also need to adjust on the fly. So I did. I had a long bias towards it for sure, and we discussed biases yesterday and how they can be useful, but how they can also potentially be really dangerous if you have a bias and you don't let the price action confirm it. But I certainly wanted to look long the stock. I thought that the earnings report was fantastic. I'm also, as we've discussed, broadly bullish on China still. I think China is just, these Chinese names are just incredibly cheap from a fundamental basis compared to U.S. counterparts, and I understand the reasons why, and we can get into that if you want. So I had to adjust my game plan on that. And if anything, by the time the market opened, I'm worried that 129 is going to be resistance. I wanted to sell stock into 129. What was kind of my initial plan here. So, whatever. They open this thing up. I see the low come in at, 124.76 at the open. I was nervous a little bit, honestly, to buy 126. The spread was like 30-something cents. I think I did something I do sometimes on these big spread names when they're moving quickly, is I just put my bid in the midpoint of the spread to see if I could get filled, and I got filled pretty much immediately. So you can see there's like a couple buys in a row here. I bought, and I think I called it out. I bought a feeler initially, and I'm watching it, and then I assessed it. I'm like, all right, this low is in here. I want more stock, and I got heavier at that point. With the similar game plan as to what I did with PayPal, similar game plan as to what I did with Unity, honestly, where I had a little bit of a core position that I probably would have given more room than just to this low, and then I was like, all right, I'm heavier now, and that I have to use a stop loss with the low of the day at. But again, I had to adjust the game plan based on the price action that occurred between when I wrote it down in the spreadsheet versus when it actually occurred. And the thought process now at that point is, originally, if this thing opened above 129, I was thinking I'll buy long versus 129 as long as I don't have to pay up too much. If they open it below 129, I'll look to buy through 129 as some sort of like ignition type of candlestick where I could maybe use that low as an out. That was the important inflection point I wanted to pay attention to buy through or go long versus initially. And now they opened this thing so far away to the downside below 129 that I'm like, all right, 129 could act as resistance. That should be an area where I should be considering taking profit. And I didn't get a sale here on 129, which in hindsight I'm annoyed at myself about. I should have been game plan better to be selling into 129, and you can see I was selling at 128 and change. I think I was just too distracted, which is not a good excuse. But I was trading the absolute heck out of SSYS off the open. If you want to see my execution dots on that really quick, so I was just a little bit distracted on Baidu. But yeah, I hope that helps with the first part of your question. Let me read the rest. However, if you're taking a bid under 126 where it opened, is that something we should look at too? Or should we wait for 129 level before the entry? I would say it's something you could look at too. I'm trying to communicate as best as I possibly can to you guys everything that I'm doing with my own trading, which is difficult because the market's evolving and I'm regularly managing 18 to 25 positions at a time, and the market's super fast off the open. It also leads to me missing things sometimes in the beginning of the day. If you remember when I missed both KRE and I think it was PayPal, like Friday last week, I think, and I was annoyed at myself for it. So yeah, I'm trying to communicate my evolution of my thought process as best as I possibly can, like when I did call out that I was buying Baidu at 126. But I don't think that because I bought it means that you should buy it. I think that the information that I'm communicating should be information that you can take and you can utilize in your assessment of your own trades based on your account size and your strategies and the approach that makes sense for you given the amount of capital that you're working with and risk tolerance and everything else. Because, you know, buying 126 versus 124.75 is you know, I'm taking over $1.25 worth of risk here. Might not be right for everybody, but it was appropriate for me. When I saw it open so low and gap down, I took my eye off it for a minute, and it eventually hit 128.9 on the first bar. And that's fine. What you just said there, I do all the time. All the time. I just had a really strong bias on this earnings report for Baidu. I wanted to be involved in it, and I was super focused on it when the market initially opened. So eventually I got distracted also. But what you described, I do all the time. I have something on my list. I type it up at the open. It's far away. It doesn't look right. I got too much else going on, and I take my eye off it. And then sometimes things go, and I miss it, and it just is what it is. You don't have FOMO, so that's fine. Should I have put a buy stop order in at 129.01 to avoid missing the breakout? No, I don't think so. Because again, the watch list I'm talking about is a watch list. So one really great idea is to take that watch list and then use the system of alerts. So everything on here you could have alerts out for. You could put, you see Baidu is opening up at 125, 129 is important, you put an alert out at 128.60. Home Depot, I said in here 284 to 285 is important, put an alert out at 283.50. 280 is important, put an alert out at 280.30. LAC 22 is important, put an alert out at 21.90. ONON is important at 34. I don't think it ever even got close to that, right? ONON is important at 34. Put an alert out at 33.80. It's never going to go off. It'll go off in a month from now. That would be the right way to do it. When the alert goes off, type up the stock and assess if it's appropriate. So you don't watch Baidu off the open. You have an alert out at 128.70 for 129. Your alert goes off. You type it up. You ask yourself, should I buy this breakout? Should I put a buy stop at 129 to buy the breakout? And the answer is no, because you would have to give to the ignition bar low on that, which is 127.75 to trade it right. You might have a higher risk tolerance than me and love the stock, in which case, maybe you disagree and it's worth over $4 worth of risk. For me, it's not. I am not buying 129 Baidu versus 124.75. That's your only point of reference on this first bar. But your alert goes off and you go, oh, Baidu 129, that was interesting, but this risk reward is atrocious. I'm not taking the trade. So then you move on. And then the last part of your question here, my bigger question is, when do we decide to be early on a trade like this? Yeah, this is hard. Like you were when the stock gapped down after earnings right at the open. Sure. So I'm going to go back to my go-to answer on that, which is that you have to have a trade set up. I don't think I was early to this trade. My trade in Baidu was not the trade that I wrote down on the Excel spreadsheet this morning because the circumstance changed. I'm not buying 126 as a cheat on 129. Sure, in the back of my mind, I know I'm buying 126. If it could clear 129, I could get a move to 134 or whatever like eventually happened. But for me, that's just a piece of information, I guess. You could almost describe it as a layer of probability. If I can find a trade at the 126 area and it eventually somehow breaks 129, then I could have really good stock for a completely different trade that's going off that could give me significantly more reward. But I was not buying 126 for a 129 breakout today. I was buying 126 because I had an opening pivot low at 124.75, and I loved the earnings report, and I'm bullish on China. but the trade itself was just like an earnings pivot low trade, to be honest. And I did not take it with a massive amount of risk, because it's not like a super high probability setup for me. And if anything, I was being influenced by the bias that I have towards it, but not so influenced that I wasn't managing risk, if that makes sense. So thanks for the question, Anthony. Another great one from Bandit. On the issue of extension and the EMA, sometimes you look for price to touch the EMA, and other times you look for the EMA to reach the base of the pattern. So you're describing a price correction versus a time correction. Is it pullbacks to touch the EMA and time correct to hit the base? Yes. Yes. So sideways, and going sideways is a time correction where that moving average eventually catches up to it. That's also known as a bear flag. You have a big down move or a big downtrend or a big up move and a big uptrend, and then it's extended and it goes sideways for a while. That's literally a bull or bear flag is an example of a time correction of extension. And we all know it by the term bull flag and bear flag. We all know it by the term bull flag and bear flag, but it probably would better serve traders to not know it by these simple names. Because like I say it all the time, trading is not as easy as memorizing chart patterns. If it was, everybody would be a billionaire. Pattern recognition, you learn your pattern recognition skills when you're like 5 years old or way younger. You know, you guys ever play that little game where you got to put the circular block into the hole and you guys ever do that when you were, 1 year old? I don't know if I did or not. I can't remember that long ago. But you had pattern recognition skills then. It's much better to understand bull flags and bear flags in terms of supply and demand dynamics, and the proper way to do that is by understanding that a bull flag or a bear flag is actually just an extension time correction, where the market moves sideways and equilibrium catches up to price. And you're describing that as a base. A base usually would imply kind of reversal eventually. It's very difficult to know in like a downtrending stock when it starts going sideways if it actually is a base or a bear flag until it breaks. If it breaks up, oh, look at that great base of the downtrend. If it breaks down, oh man, I saw that bear flag, right? I saw that bear flag. I knew that bear flag was going to go down. There's a lot of patterns that are like that. It's probably my end. So bull flags and bear flag, a bear flag versus a base. In the moment, it can look like this example of that is an H pattern versus a double bottom. You can look at charts sometimes and is this going to be an H pattern or is this going to be a double bottom? As it's forming, it looks the exact same sometimes. But an H pattern and a double bottom means that you're going to get a reversal and the stock's going to move up. As that second low is potentially forming, is this an H pattern where I'm getting downside continuation, or is it double bottom? I don't know. One of the most interesting statistics I've seen recently is that, like, I forget what the number was. It was like 30 to 50% of patterns fail. So take the upper end of that, right? 50%. So if the statistic is that 30 to 50% of chart patterns fail, assume it's 50% for a second. How the heck can anybody make money trading chart patterns if 50% of them fail? It's because you understand supply and demand dynamics well enough to know that not every chart pattern is created equal. You understand layers of probability so that not every chart pattern is created equal. You look at this chart pattern, and if you're looking at it in a vacuum, has a 50% chance of being a base that breaks out and a 50% chance of being a bear flag that breaks down. Is it going to break up or is it going to break down? I don't know. But I can tell you that this is a higher probability of breaking out or breaking down when I look at that potential pattern with those 8 layers of probability that we described off of Kyle's question earlier. So, hope that helps, man. Guys, great questions today. I think that this was actually an excellent afternoon meeting, despite the market being like giving us nothing to talk about. The reason why it's an excellent afternoon meeting is because of Kyle and Anthony and Bandit asking really good, insightful questions that we are all able to analyze and learn from. So I'll leave this off with what I always say. The virtual trading floor here is called the Pro Desk. It's not called the Patrick Hall room or the Derrick Oldensmith room. It's the Pro Desk. We are a community of traders. This room will always be as good as you guys make it. And the way that you guys make it good is by providing information during market hours that helps everyone to understand the market better and make money and look for trading setups, and by asking really good questions in our afternoon meetings so that you as traders can improve and everybody can improve. And with that said, I will say that we make this the best virtual trading floor that T3 has. I'm biased, but this is the best one. So good stuff. I am going to hop off and call it a day. Have a great night, everybody. I'll see you all tomorrow.